Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Welcome, everybody. I'm so excited for today's podcast. We have a fantastic guest, Elizabeth Rossiello, who is the CEO and founder of Aza, a really interesting fintech focused on Africa that brings together a lot of the different vectors that we cover. Help me welcome Elizabeth to the podcast.
Thanks so much, Lex, for having me.
Absolutely, my pleasure. So we often start out asking folks how they got into some of these really multidisciplinary and complex topics like fintech and sort of the broader footprint that you have. Can you tell us how you got your start in the industry? Where did you get your kind of initial training for what was going to come?
Well, it's funny because we were just chatting that we went to the same school, and I'm from New York City, which has 5 boroughs, and I commuted from one borough to another from age 12 to 18. So I did 90 minutes each direction.
Where did you commute from?
I commuted from South Queens, so I'm from Woodhaven, Queens.
Amazing, Rego Park.
Oh, shut up.
So the R train, right.
Yeah, Woodhaven. Wow, this is really Lex. This is really funny how overlap. Yeah, I'm from the Q11 to the R train, even better. So I've been a nomad for a while. I used to compare going to my high school to like visiting outer space for where I was, just socioeconomically and geographically, and the things that I learned there as opposed to where I was from. And that kind of continued when I finished grad school and I went abroad to Europe and then on to Africa. So, I mean, I've always felt like an other and always felt that I was working and connecting different types of people. And when I was a translator in the German parliament, I was connecting the people that I was working with to the English language media and English language research during a really tough time geopolitically. And when I went into finance and investment banking, I was working with Phil Vasson and Credit Suisse in prime brokerage. And at that time, markets were crashing. All my friends who had gone to different banks were getting fired. Lehman was collapsing. And I was getting a bonus because we were a profit center at the bank and because we were connecting all these disparate customer segments, these different kinds of groups. And I was using my knowledge of language and my knowledge of culture and my knowledge of finance and research. And, you know, a lot of the work that we did there was very technical and nerdy and operational, connecting, you know, high flying fund managers with, you know, different kinds of products and technologies and investors that could help them. So I always felt like the work that I did, you know, starting from school, then moving on was how do I create value, you know, as another, how do I create value between two things? So when I arrived in Kenya in 2009, to work in microfinance. I'd never been to the African continent. I'd always studied European things and languages. I didn't know much about Africa. And I was sent to go across the continent, one different country a month, and really dig deep and learn about why the microfinance institutions I was rating were failing. And so literally sent from another planet again, plunked down, had to do all my own logistics and, you know, visas. I didn't know anything about how to get to Ghana or South Africa or Nigeria.
Let me pause you there because I want to ask a question about the experience and the motivation, because you do have this background that is a combination of, let's say, very rigorous Wall Street and finance training in Credit Suisse and Goldman internships and, you know, touching a lot of capital markets, and prime brokerage is a very sort of institutional part of capital markets. But then you also have this thread of working, let's say, on the political science side, right, at that time. And it looks like you took a fairly hard turn in 2009 in that direction. How was that motivated? What brought you there in the first place?
I guess people now, I mean, kids today, they graduate, they're not going to go into a bank like we used to do, or I used to do. I mean, I worked in M&A at Goldman, which is like, you know, every little, you know, 21-year-old's dream coming out of school back in the 2000s. And it was, you know, not as hard as working at the German parliament when I was working in research and translation of research. And when I got to Africa, that was the hardest thing. When I got to Kenya, learning what I did about the models of how to do that. So I think there's always like the marketing around work, like the marketing, like this job is so hard to understand. It must be brain science. And we see that a lot in crypto, right? Like, wow, these engineers in this new coin, they're so smart. It's a genius. And you like take two layers off and you're like, this is dopey, you know? So I think rather than think that I was like learning so much in the halls of Wall Street, not that you're saying that, I'm exaggerating. I think what I really learned early on was how to do research and how to look deeply at something and analytically at something and how to write about it and how to communicate about it. Now, whether that's economic research that I did before I went into banking, I went to grad school for international finance at Columbia, and it was the SEPA school, which was multidisciplinary. So you took finance, you took economics, you took statistics, but you know, also went to the business school and you took Russian history, etc. So I've always been looking at things from a multidisciplinary perspective. And that's what I love about crypto is that people come at least with the intention of, you know, something more than just finance. Sometimes it is a political statement in some ways. And, you know, usually it's a community building as well. So, you know, I do feel like that has been a theme. And I wasn't using every tool or skill I had in every job, but I think the ability to do research and the ability to understand deeply some complex problems has served me well throughout all these
Absolutely, yeah.
different little starts to my career before I really got started.
So you're on the ground, you're figuring out your visa, you're in Kenya. What happens next?
So I'm in Kenya and they're like, guess what? The other guy at this job quit. So it's just you. And not only did he quit with like, you know, arms in the air, like, get him out of here, you know, like the Seinfeld level quit. So I'm in Kenya. They're like, okay, you have a rating a month for the next 6 months planned in 6 different countries. You got to get there. You got to spend a week on the ground. You got to go visit the regulator and figure out what the new regulation is going to be about microfinance. You got to visit all their competitors and you've got to write a 20-page report.
What is a rating?
Yeah, it's a 20-page report that you then sell to investors in the space. And they want to know, just like a regular rating, they want to know what the institutional capacity is for success. So we would call it, we look at the governance, we look at the information systems, the technology, we look at the risk level, we'd look at the assets, the finances, do some forensic financial analysis. And then we'd look, you know, from a social perspective, who are they helping, et cetera. And it meant going into these businesses, these little financial institutions, and meeting with everybody, interviewing, then usually traveling to branches or visiting cooperative groups on the ground. And that's when I really started learning things. Forget Goldman. That's really what taught me my life began. I'd go into like rural Malawi on the back of a motorcycle for a few hours, and I'd meet with village groups of women who would tell me how they're saving and investing with like small amounts, and just blow my mind about what people thought finance was and what they use it for and what the risks are from the weather cycles or the government, and how outside influencing factors like voucher systems from the government or NGOs would come in and change the economy, and you know what was working, what wasn't working. There was a really cool organization which is still there called Give Directly, which was doing direct cash transfers in neighboring places. So I was able to compare what a direct cash transfer versus a microloan was, which was an asset loan. I learned so much and I wrote about it. And I did that for a few years. And then when I too threw my hands up at the rating agency for, you know, poor management, I went ahead and started writing research reports for Grameen Foundation and Acumen Fund and doing due diligence and working with a lot of the teams that were coming into the continent to try to invest in social enterprises. So solar, ag tech, health tech, and of course, financial services and fintech. And a lot of that was around mobile money. So it was an incredible 5 years.
That sounds incredibly fast-paced and challenging and interesting. Are you able to tell us some of the personal stories that you experienced where, you know, you mentioned the impact and just seeing like the tangible version of what money and finance is in people's lives and how it makes a difference? Are there any kind of firsthand stories that you could share to paint the picture?
Yeah, so many. Let me stay with one. So like at the time, M-Pesa, which was Vodafone and Safaricom's marriage entry into mobile money, had just started. You know, that was like '07 really got going, and I arrived '09. And that was ripping across the country of Kenya, somewhat in Uganda with MTN, a little bit in Tanzania, but really nowhere else. nobody else was really using mobile money. It was failing in South Africa, it was failing in Nigeria. And so there was this like phenomenon happening on the ground where, in the year or two that I was there, you could pay for everything with your mobile phone. I would leave my wallet at home. And this is like, 2 decades ago. Oh my God, it's 2021. And, I would go to a conference in Turkey for something else. And I'm like, guys, I don't use a debit card. And they're like, minds were blown. So that was happening. And then you'd go visit these super rural places, which, had no internet electricity and no access to the internet and were like completely left out. So you had what we call financially included, financially excluded, and then just inactive because there was just complete dead zone of ability to access any services or even, the internet to get online services. And in the few years that I was in Kenya, the financial inclusiveness went from like below 30 to above 80, which was amazing. It was like this swept across the country. And even the inactiveness, so people who were completely left out, who needed just like cash donations or something, decreased rapidly. And Kenya did a tremendous job. And most of that was due to this technology that was embraced by everybody. It was embraced by the government, it was embraced by the utilities, it was embraced by the companies, and it was embraced by the population. And so it just really motivated me. And I think people are all around the world to say that this can work if everybody moves in the same direction. Now, it went a little too far and it's a monopoly, and I've had my struggles with them, and that's public, so I won't go there. And, monopolies have their place in history. So I'll leave that there. But it was just very fascinating to see that happen. And institutions and villages that I visited over the course of just a few years rapidly changed because of that access. And one of the things, and this is a little nerdy, is that you'd go into these banks and you'd have a great management team, who knew what they were doing, had been doing this for years. Maybe they were born into it, and they didn't really understand how to use the software to manage their growing portfolio of loans. So the software was built in Ireland or in Asia or in the US, and some NGO had given them the software. There were no updates. They didn't really know how to use it. There was maybe a teenager from 2 towns over who was like their CTO, who, the thing was like riddled with bugs and he didn't know how to fix. And, I'm exaggerating, but he had all sorts of things saved on the hard drives. And, there was local servers, which were a mess. So it was just impossible for them to catch up in terms of getting to the place where they could have the same sort of software and infrastructure and technical know-how to run a growing business with such a gap. But when mobile money came in and Passive was like, here, you can do all of your transactions right here on our little baby local cloud. And you can, upload everything to Safaricom servers and we'll manage your transactions. And you don't even need software. And that was like, for me mentally, that was the baby step before crypto. It was like, how do we give away our transaction history to something greater? Now, again, they were giving it away to a monopoly, which is why I'm scared of a lot of coins in the space. But it was just very interesting to see how willing and how much people needed that technology jump. I don't know if that's like the mushy story you wanted me to tell, but that for me was fascinating.
Yeah, I find it fascinating in a couple of directions, and this comes up multiple times and in different places. Where really it's the constraints that create the solution, and without the constraints, you don't have the innovation and the high art, and it's the constraints that generate it. And so what's amazing to me is that all these things that blocked the type of finance and software and kind of banking model that the West is used to, like access to electricity and access to the internet and the broad availability of machines and things of that nature, like the lack of that is what allowed kind of a surprising set of actors to bloom. If you look around the world, telecoms are not generally the providers of money, but in this particular case, they were set up to take that chance. And I think one of the lessons for me, at least, is that in places where it's hard and where there's a wall, you'll find a lot of surprising growth, and you'll find growth from actors who might not necessarily be holding the same market position in different places. And I think that's really cool to see happen.
But, we didn't see that elsewhere. So first of all, I want to just say a couple of disclaimers. I was working in, microfinancial services. I was seeking out these areas. Nairobi is a booming metropolitan area where like everybody has cars fancier than I could ever afford. And so is a lot of other capitals across the continent. So it's not like everybody's crawling around Kenya with no access to the internet, et cetera. I don't know if that was inferred or not inferred, but not at all what I meant. The middle class and the financial sector, the TradFi, traditional financial sector boom in Kenya has been miraculous in the last decade. So there's a huge middle class there, et cetera. So, most of the country is doing just fine. So that's number one. And number two, in other markets, it wasn't necessarily the telco. There were ISPs that developed who brought internet. We have, in the undersea cables in Nigeria were the ones that brought in, actually a female-owned company called Main One brought in the undersea cable and competed directly with Google and won the business of the biggest contracts there. And that was pretty cool in Nigeria. And they brought in high-speed internet, and the telcos didn't do that job, although it happened maybe a couple of years later. So I agree with you that happens. It's not always the telecom on the African continent. It was in Kenya. That model hasn't been replicated in other places because the monopoly infrastructure and the central bank actually got scared by it. That's another learned lesson, which is like what happens when there is success, when it's tried to be replicated. One, it doesn't always work. Two, other actors got an idea, so the second mover is fast. And three, sometimes governments get in their own way and they get a little bit nervous and clunky, and it's hard to replicate.
Yeah, absolutely agree with you. I think maybe Orange comes to mind as an example that's worked in the West, but generally speaking, the telecoms lose out to the hardware providers, and the hardware providers like Apple end up incorporating everybody else's features and then getting regulated into oblivion in a way and become actors of, let's say, sovereign nations, which perhaps outside the scope. But to continue your story, what were the next things that happened that led you to the World Economic Forum, as well as to becoming a founder and jumping in with your own idea? And I guess quite early on, actually.
Yeah, so 2013, I've told this story before, but basically I had left the rate agency. I had been consulting for these other investors, and I just felt like I was giving my work away to men, to be honest, to go read at meetings. And I was like, I've been doing this too long, since I was a baby investment banking analyst, where I would get up at 5 in the morning or 4 in the morning and prepare an entire research thing for someone else who woke up late to read and say it was their work. It had been like 10 years that I was doing that, and I was just over it. I had had 2 kids in 2 years. And for any parents out there, any mothers listening, that you've suddenly entered Marvel territory of superhumanness. And you're like, wait a second, I'm capable of great things. Why the heck am I still giving away my work for free? So I met with a seed investor who was like, I want to invest in this space. I'm giving out checks. And I'm giving it, do you know these guys that I could give out these checks to? Who are the other guys starting companies in the scene? And I was like, wait a second, I want a check. So I took a 50K seed check and started the company like that. And within a month, I was just so invigorated that I was my own boss, and that, whatever I did was immediately hitting the bottom line, and there was no bullshit above me, and no NGO or social enterprise like bureaucracy. And it's been published widely. I think somebody published the tax returns of Acumen Fund, which means well, but spends a lot of money on overhead. And it was just really empowering. And so in a month, I had a little prototype up, and it was buying Bitcoin to Kenyan shilling, delivering it straight over mobile money into M-Pesa. So, in a couple of seconds, you can buy or sell Bitcoin with M-Pesa. And yeah, I did that in 30 days. And then it was October, November 2013, and the Bitcoin price was going to 1,000, which was a big deal back then. And a girlfriend of mine worked at Bloomberg, and she was like, hey, let me write about you. And I was like, why? I'm just working on this little project. She's like, no, you're a founder now. And I was like, I guess so.
Yes.
And then I was like, no, I'm just like a mom with 2 toddlers crawling around on the carpet, like doesn't know what the hell you're doing, just doesn't want to go back to work for these creepy guys. And
I mean, that's a fantastically difficult, exponentially difficult journey, right? So it's super hard to be a female founder, especially, I mean, it's getting incrementally better, but when you started, it was entirely uphill. And you're also in a place where you are building services for Africa, right? Coming from the outside in. And so there's the cultural barrier and being able to bring that over. And then it's also Bitcoin in 2013, when there's still a whole ton of disinformation and kind of a lack of understanding that, again, is getting better, but is not all the way better. And you are a mom of 2 young kids at this moment. How How did you find the drive to get through this?
I mean, honestly, anger. I was really angry. I like kept going to interviews. And there was one for like Axion, which is like a big social investor. I'll never forget. I'm in the interview. I'm pregnant with my second child. Nobody's supposed to know. I'm so overqualified for this job. You know, it's like doing exactly what I've been doing, and they want 1 year experience. I have 5. I helped a lot of their team, understand what was happening on the ground, just like I did for a bunch of other funds when they were setting up. And some guy in my like extended friend circle tells them that I'm pregnant, and they decide to have a couple more meetings where they just like drain my brain of information. And then they hire somebody that's inexperienced, like some kid from the US that has no experience on the ground, doesn't know anything. And I was just like infuriated. I was infuriated that this kid with no experience got the job. I was infuriated that they didn't trust me as a mother to balance the two. I was infuriated at my so-called friend network for, ratting me out. And I was infuriated that like saying that you're pregnant means you can't get a job. So, I had like 100 of those experiences. So it was it. And, there was no way back, I guess you would say. So once you start something, you gotta just there's no way back because there's going to be all these like what we call WIFIO moments, right? That's in that famous book. We are fucked. It's over. WFIO. And you have to be like, this is not WIFIO. I'm going forward. And so, that was just the start of it. And the second thing was I was really welcomed. A month in, after the Bloomberg article went out all over and got a lot of hits, and it was like Western Union killer with Bitcoin starts in Kenya. And the article was like, some crazy lady is starting this. So Barry Silbert found me on LinkedIn, believe it or not, back in the day when people used LinkedIn. And then he connected me with Charles Hoskinson, and I had a Skype call with Charles. And I just chatted with him the other day. He's like, yeah, that was a couple of coins ago. And, they were like these intellectual, interesting weirdos who were like, hey, person in Kenya, how are you? We're happy you exist. We're so happy you're alive. We're happy you're doing this work. I'm like, work? It's just been a month. And they're like, no, this is your work now and you're going to do it. And it was so welcoming and encouraging. I mean, it was weird. And, it was like online, which I hadn't had that experience till that time. Now it seems pretty normal. But I would reach out to people all over the world. I think Jared at CoinSetter was the first person that traded with me. And, I met counterparties all over. I met Bobby Lee pretty early on. We were trading in China with him. And it just was cool. And I started a meetup, and, a bunch of cool Bitcoiners, like 4 or 5 of us, would meet in Nairobi. And there we go. So I guess it's about community. It's about a support system. It's just like one word of encouragement. And it's that drive that, you want to achieve, you want to win.
Yeah, infuriating and invigorating what you're describing. And I think for me in the crypto world, it is amazing that you find a lot of people who are genuinely authentic and then so multidimensional and talented in different ways, but then are unabashedly geeks about what they do. And it's cool that they can be this way. And so, for people who are able to engage, to really find their tribe and work with people they like, it's really quite liberating because you do feel like you're sort of just expressing your own vector forward. So I want to get to the punchline, and I know we've had a long roundup to it, but looking at your website, Aza has powered almost 4 million transactions, over 1.5 billion in funds have been transferred. You're in over 100 different markets all across Africa. So in many ways, it's been a fantastic success. Can you tell us more about how Aza works, what it does, and a little bit about your footprint?
Sure. So when we started, we were called Pasa for any OGs on there listening in. And we changed to Aza a few years ago because Pasa is a Swahili word and similar to East Africa. And we moved heavy into West Africa and other markets that didn't associate with that word. And also it was one of our products. So we kept it as that instead of, just the brand name. But when we started, the idea was, why can't we take what's successful here in Kenya and share it with the rest of the world? And what's successful was instant ability to pay when you're not in person, almost like a PayPal-like ability to pay, but connecting to all of your banking needs with your phone. And then how do you do that internationally? Because PayPal at the time, and I just saw Dan Schulman last week, and he was like, we're in Kenya. Yeah, they were not in Kenya in 2013. There was no way to access PayPal. There was no way to access, American Express or Swift would take 2 weeks. So we wanted that technology to be used, which now seems very old fashioned, but wasn't available then. And if you wanted to buy a car or make a down payment on a house in Kenya, you had to go to the ATM, not the bank, because that would take forever. And you have to withdraw from the ATM, at $200 a time for, 2 weeks or something. So the idea was, how do we make seamless transactions in different currencies available at the same speed of mobile money? Now we would say at the same speed of digital currencies, but at the time then that was a unique thing. So that was the goal. And we've done that. And basically we've had to build a hybrid business. I think this is very important because a lot of people think, well, I start out to do this, I'm going to use this technology. And as you said before, it doesn't necessarily fit the problem as you learn more about the problem. And it's very important to evolve. And we were using Bitcoin on and off ramps globally to do the other side of the transaction. So we would do the transaction in Kenya very seamlessly. And then there was no market maker and there was no on and off ramp in the UK at the time. And it wasn't until 2015 that we finally said, well, we'll become that on and off ramp because nobody's there. Jeremy Allaire had gotten an API license, I believe, in the UK, but they weren't opening up in the UK. Coinbase decided to go to Europe. It wasn't there. We had nobody to trade with. So very quickly we realized it's not going to work unless we build that out. So then instead of just becoming a counterparty in one currency, we decided we needed to go ahead and become that infrastructure provider. And that was a seminal point. And, some of my investors would say that's when we went from retail to wholesale. But for me in the business, that's when we went to understanding if you own the infrastructure and the on and off rails, that's even more powerful because then you can build product on top of it. Then you can provide a high level of quality of service, customer support. You can also, most importantly, understand when payments have been made on your infrastructure. And that helps you reduce risk, which of course lowers the price. And, anybody who owns a order book will tell you that. So that's when the company started to build infrastructure. And then we became very good at building infrastructure for fintech in emerging markets. And we would go into a market, and we're now in 16, 17 markets with physical infrastructure, and then, in over 50 with partnerships. And basically we go in, we create a subsidiary, we link up to the bank, we connect into the aggregator, we build directly into the banks, into the central switch, and we build things that weren't there before. So in Francophone West Africa right now, there is no centralized switch that really works. So you have to go bank to bank and build into everybody's middleware. And you have to build into the mobile money, and you have to build into the cash networks. And then you can do everything from a tiny mobile money transaction all the way up to a couple $1 million bank payment. And that's all on my infrastructure now and what Aza has built. And then on top of that, we have this layer of services and features that our customers have taught us they want. And so on top of this layer that we own, this infrastructure, we can now provide, the lowest error rate of payment across the continent and beyond. And when we talk to some very big crypto houses or very big fintech customers, remittance customers, they say to us, all's good and well, you can give us access into Ghana, but can you do a couple $1 million every hour? Or what would that look like if we were to scale rapidly? And that's what we've shown. So I think it started with how do we provide this? And we realized the problem was bigger and we need to do that as well. And not every company is built for, doing multiple things at once. But this is what we've been building for. And it's been a great success.
Awesome. Let me double click on a couple of just words and definitions because they sometimes mean different things to different people. So what are the different components that would relate to like payments and retail transfer versus something that has to do with a business doing treasury management? What are the bits and pieces that you need to pull together to make that work? Yeah.
Yeah. Okay, let's go there. So retail is usually what we call below a limit, right? It's below $2,500. So that means, in some places it's 3,000, in places 1,500, it depends. That lets you do it over mobile money, which is really, the easiest way. Let's call that the debit card of a lot of these markets. It's easy to do because, you have one access point into the monopoly telco of the country and you can get in and out. It might be expensive because the gate in and out of that mobile money might be expensive, $2, $3 per payout per transaction, but it's pretty simple from an architecture perspective. When you start to need larger transactions, which is what we specialize in, you have to work with the banks. People need to pay into the bank or get paid out into a bank eventually. If they're selling crypto or they hate crypto and they just want to pay a big invoice globally, they need to do that. that's when it becomes tricky. There is no ACH or SEPA or faster payments in a lot of these markets. Nigeria has one, which, is the best of the worst. And that's why there's so many Nigerian fintechs. But in like 54 other markets, you don't really have that.
Just on that, what is the banking market structure like across the different countries? Like, is there 2 or 3 banks per country, or is it a whole bunch of small ones? And then, like, how connected are they?
Well, I don't want to generalize because
Yeah,
it's
that's fair.
55 markets, but what we see across the continent is a couple of global brands like Standard Bank, Standard Charter, Barclays, now Absa, the end. They're not in every market, they're in some markets. In some markets they're just like a sleeping giant in the corner, not really doing much, and some they're like the top banks. So that's like the tier 1 global banks. Banks like Citibank, HSBC are virtually not non-existent. Then you have regional giants. So you have things like Equity Bank or the Moroccan banks like UBA and Bank of Africa and BOA, Bank of Africa, et cetera. And those brands that go, maybe in 2 regions, maybe they're in East and Southern, or Francophone North Africa, and then in Francophone West Africa, things like that. But even like a UBA or an Echo Bank, they can show you a map of 20 countries, but they'll have 7 different systems. And their trading desks don't even know each other. They don't talk with each other. They don't trade with each other. So it's a bit of an illusion. So you're really not seeing regional coverage in the same way you'd see across Europe. And, if it's not the same brand that's doing it, then maybe there's sort of, a government utility like a switch, but that doesn't exist either. So there's almost, although you do have a booming financial sector, a banking sector with tier 1, tier 2, and then tier 3, and then a long tail of microfinance, you don't have the kind of cross-border coverage which you'd see in other markets. And I guess that was similar to South America or Southeast Asia 10, 20 years ago, but it's unique to the African continent right now.
What does it mean to integrate into these banks? Because I imagine and I mean like at the very ground level, right? I imagine some of them might have some CSV file you can upload into an FTP server, or they might have some global standard or IT department that's, like you say, sleepy, but at least is available. And then you might have other institutions that are completely bespoke and surprising perhaps in how they handle their technology. So like,
Yeah.
what's the sausage making of actually integrating into so many institutions of such variety?
Well, let's just talk about what's available now. I won't bore everybody with what was available in 2013, but we did go to a library, a physical library, to find out how to get into the software that was being used from the 70s in one of these banks. But right now, most of the big tier 1, tier 2, tier 3 will at least have a CSV upload. That's clearly not ideal because nobody wants to wait to the end of the day and do all that. And the rest of our product is an APIs, then it's like hard stop, manual. Let's switch over to manual, but it is what it is. Some banks, like maybe a dozen, have a really high functioning API that's updated constantly within an in-house team, maybe even less than a dozen across the continent. And then everybody in the middle has some form of an API that somebody built for them, maybe or maybe not updated, but usually it has to be customized with each integration partner and isn't, ready to go with any kind of SDKs or anything. So the integrations take a while. We're really good at that. There's a commercial aspect, there's a compliance aspect, there's just an overall partnership, competitive aspect. They would want to let you in. And then there's the integration aspect. And then there's the support and the scaling and the updating aspect. So it's a complex business in itself. And we do have what we call aggregator models who that's all they do is connect into banks and mobile money. A lot of those aggregators have given up quality for speed and they do the quickest way to market. And then when you scale with them, you realize that it hasn't been updated or, nobody's watching it or there's limits or there's a manual step along the way and they fail and error rates go as high as 15-20%.
Wow. Yeah.
So it turns people off. And, we're having a talk now with a very big partner and they're like telling us their horror stories across the continent. And we're like, yeah, well, that's why we started to build infrastructure. And, we're all people who are nerdy, who worked in areas like ratings or banking or audit or, pricing and controls, trading, who really care about latency, who care about error rates, who care about consistency. And most importantly, if you don't own it and know all those things, you're going to be left with a risk exposure, which is a theme that I used to write about all the time in my rating reports. If you don't understand or know your transaction, how the hell can you rate the risk? How can you price the risk? And then you end up with nobody offering foreign exchange because they don't know, when it'll be settled or delivered. And so how the heck do they price it? And that's why across the African continent, all African currencies are mainly a spot market. And you still don't see it. That's an infrastructure issue. And since it was an infrastructure issue, it's then a people issue, because since the infrastructure didn't exist, nobody built the teams to know how to use the infrastructure and to actually trade on that. So it's become a more complex issue, which is great for me. It's a high barrier to entry. So to be able to trade foreign exchange, to be able to understand how to do cross-border payments, you first have to have the technology and infrastructure available, then have the team to know how to use it and to price that risk, and then, have the product the customer wants and sew it all together. And that's treasury services and that's treasury management. And these are dorky, nerdy words nobody wants to think about. But if you have a hot and sexy fintech that processes credit cards and just got a huge investment from Visa or MasterCard and promise them access across the African continent, you're taking on a huge FX exposure. People are shopping all over the world and you have to settle those payments in Europe and Asia and the US, and your own home currency is incredibly volatile. So how are you making transactions and trades to offset that exposure? And I think that's something that a lot of really fast growing fintechs don't think about. And that's all about treasury. So then you go back into the cycle of, do we have the infrastructure and the know-how on how to offer treasury products?
Yeah, the skill set of making fantastic PowerPoint decks to raise money is quite different from the skill set of actually doing the thing. I guess you raise the second leg, right? So you've got money in motion for payments, and then you also have the capital markets piece, the FX piece globally. Can you talk about that? And do you work with market makers? You mentioned trading Bitcoin with Bobby Lee back in the day. Like, what does the market making look like across your footprint? Do you have your own trading engine, or is that in or outside the perimeter of the types of stuff you do? Like, how do you think about the capital markets part of the equation?
Yeah, I mean, that's a core part of the business. So, one part is the infrastructure, the second part is the FX, and I guess the transactions is just the juice going between the two. So, from the get-go, we have our own trading team in-house, and we are essentially an over-the-counter broker. Again, these are not sexy words that my shareholder would be my shareholder letter or my banking advisors would want me to use, but that's essentially what we are. So we take exposure on our own P&L. So when a big trade comes in, we make sure we can match it and we can pool it. And we were the first on the continent to pool like this. There wasn't anybody doing a Naira shilling pair. There wasn't anybody doing a ZAR ZOF pair, which is from Francophone West Africa to South Africa, because nobody knew how to get rid of that exposure and nobody knew how to take it on and then trade out of it. And nobody had the customers to do that. Nobody had the know-how on how to price it because they didn't have the customers. So it's like a chicken and an egg scenario. So once you understand when payments are coming in, once you feel confident that you have the infrastructure in two different places, in the UK and in East Africa, you suddenly realize, hey, I can actually pool. I can buy and sell. I can take an FX position on my own balance sheet and offload it by pooling and crossing. And that's what we started to do. And we've written about this a lot. And this is what's won us a lot of awards, like Fast Company's Most Innovative FinTech. And, it seems simple, but it's actually very complex operationally. And we don't do the off ramp and the on ramp in Asia. We don't do the off ramp and on ramp in the US. So in those places, we need to use brokers to pay out into US dollars from the US. Nowadays, we have our dollar accounts there, et cetera. But I wouldn't say we're licensed in North America to do that, nor are we in Asia. So back in the day, if I wanted to pay out in RMB, I would have to, do all the compliance, take on the position in my home currency, whether it's shilling or Naira or ZAR, and then I would send Bitcoin to China and Bobby Lee would pay out into RMB when he was still active doing that. And so I like working with exchanges and either over-the-counter exchanges or other exchanges that have high liquidity on the order book, because, everybody's doing their work in their own region and we're doing it in our region. So we love the guys at BitPagos and Bitso and, CoinsPH and Tony Lu back in the day in Corbett and Bitflyer in Japan, BitOasis in the Middle East. These were all teams Barry Silbert had invested in, who we knew from, the portfolio get-togethers, and we were just doing, the universal work on how to bring that on and off ramp into these regions.
That's fantastic. Thank you for sharing that. We're coming up on time. I wanted to ask a forward-looking question about, I guess, the product set. And there's the broader observation that you lay down the payment rails and the trading rails for money in motion, and then you start getting to a place where people begin to accrue balances and begin to save and start to invest. And we're seeing a lot of bundling across various categories within fintech, and then in particular on crypto rails. The distinctions between saving and spending and asset management and all of that are in large part dissipating. Do you see any of those opportunities as being interesting to the company? And then maybe contextually within the geography, like, is there a shift coming? Is there a change in the types of products that people are going to access?
I just went to go buy like a charger at the airport, and he's like, "Do you want this multi-component charger that has 12 chargers in one?" And I was like, "No." I was like, "I want a single component charger." And that's the kind of girl I am. I think you named a lot of different financial services. Some are complementary and adjacent, and others are not. We have a joke at the company that like every offsite, some junior member brings up the topic to, the C-suite, and they're like, "Hey, how about card processing?" And then the whole company goes, "No card processing." you know, because we just see it as like a retail business, but blah, 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 a lot of things about it. And, I think it's really hard as a founder to stay the course and know your core business. And if your core business is Revolut, where you're like, I want a suite of retail products, that's one thing. But if it's not, and you're getting into that, you have a big think about whether that's for you. We have a lot of work to do in the space. We're very focused on being a B2B enterprise business and working with businesses who have these needs. So within the scope of treasury services, for sure, I think deposit taking is another planet. And I don't think we're headed in that direction. And I think it's going to be interesting because a lot of people get pulled into that space, and that really, messes up I believe, from what I've seen on the continent, it messes up your regulatory outlook. So I think for us right now, we stay in the transaction space, we stay in the enterprise space, and we stay in this foreign exchange and treasury services. And there's a lot of things to be done. I mean, working with a bigger balance sheet and bigger investors and partners in the next few months, we have a lot of things coming out. We'll be able to do more forwards and futures and more what we call post-pay or delayed settlement, T237, et cetera. That's super exciting, and there's a lot to be done in that space.
Absolutely. And focus is incredibly hard, especially when everything is so shiny in the bull market. So I applaud you for it. If folks want to find out more about you or about the business, where should they go?
You can DM me on Twitter. I'm a bit of a grandma, but I'll get out there. Or find us on our website at azafinance.com. We're also active, even though I hated on it a little bit earlier, on LinkedIn. And reach out.
Elizabeth, fantastic to have you on the podcast. Thank you for coming.
Thanks for having me.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.